Oh, so good to see you again. Welcome back to this week's episode of Closed by Mo. My name is Mohammed. You can call me Mo. That's what everyone calls me. I'm hopefully your favorite YouTube host on most things real estate. I'm also a real estate investor and a broker based in New York City. And as a broker, I've gotten the opportunity to broker a handful of co-op transactions, enough to know that when it comes time to tax season, a lot of co-op buyers, sellers, and even co-op owners start to ask questions about, hey, what can and can't I deduct in terms of overall property taxes when it comes time to file my taxes as a co-op property owner. It's not as straightforward as you might think when you purchase a piece of like a property or like a house, because you know what your overall tax bill is. As a co-op, there's a couple of different nuances to it, which we'll cover in this video, so stay tuned. Right now, before I even begin explaining what to expect as a co-op buyer, seller, or just anyone that maybe owns a co-op and is now starting to file taxes in their first year of ownership, you have to understand something, right? Fundamentally, there's a difference between buying a house, a standalone house, or any kind of real estate versus buying a co-op. When you're buying a co-op, you're not technically buying the property or the land or anything like that. You're buying shares in the corporation that owns and manages that building or the co-op tower or whatever it is, right? Now, the difference here is in terms of like what you should expect when it comes time for tax season. So if you were to, let's say, buy a house, a standalone house, either your tax payments are incorporated into your mortgage, if that's how your mortgage company wants to handle it, or you get a tax bill and every quarter, every month, whatever it is, whatever setup you have, you're able to pay that tax bill directly. And then of course, since you have the tax bill, you take those bills, you itemize those when it comes time for tax season, so you can reduce your taxable income. In a co-op, you don't really have all that, right? You have a monthly maintenance payment. Now you have to understand that monthly maintenance payment doesn't just go into, I would say, the co-op's coffers or the treasury just to take care of like ongoing costs, capital assessments, things like that for common charges. That's not the only use case, right? Because remember, you own shares in the corporation that owns and manages that building. Effectively, the corporation is the one that's responsible for paying the taxes. You, as a shareholder in the corporation, now are paying a monthly maintenance fee. And you have to understand that you have to definitely confirm how much or how big of a portion of that monthly maintenance you're paying is going towards the overall tax liability of the building itself, because the portion of your monthly payment or your monthly maintenance that's going towards that tax bill is the amount that you're able to deduct from your property taxes, or when it comes time to itemize your deductions for your overall taxable income purposes come March or April, right? So again, I just want to stress that you're not responsible. You're not going to be getting a tax bill in the mail like you would when you, let's say, own your own house or own a standalone piece of real estate. Instead, your monthly maintenance is already covering a portion of the taxes, and it's your job as a buyer or working with the right broker to figure out what portion of the monthly maintenance is allocated property taxes. So let's say hypothetically, you have $1,000 a month monthly maintenance. This is of course separate than the mortgage payments, right? Now your $1,000 a month monthly maintenance might go, let's say, 20% towards capital assessment, another 20% for common charges, and maybe 60% for property taxes. So you have to keep in mind, come tax season, 60% of your calculated monthly maintenance for the whole year, or the year that or the amount of time that you've owned the property for that tax year, is not going to be able to be something that you can itemize and deduct as property taxes from your overall taxable income. There are some nuances there. Obviously, it's very, it's building by building. It depends in terms of how much of the monthly maintenance portion is going to be allocated to the the property taxes of the building or the property taxes of the corporation. But that is effectively the important thing that you have to understand, if that's the only thing you take from this video. So you, as the buyer or the owner or the seller, even before I would say you purchase a co-op, or maybe even sell, you have to figure out, okay, you have to look at the co-op's financials, and you have to figure out, all right, if I'm paying $1,000 a month, hypothetically, monthly maintenance, how much of that portion of that monthly maintenance am I actually able to deduct from my taxable income? And the easiest way to figure that out is obviously review the financials, maybe even ask the broker that you're working with to just to make sure. Because remember, if you look at like a big sticker price of $1,000 a month, you have to break it down to figure out, okay, how much of this am I actually going to be able to take advantage of and deduct from my overall taxable income. I will definitely make sure I post a link to the blog post that describes all this in the comment section below. In the description section below, because there's a couple of other nuances that are also involved. For example, the SALT limitations, right? There's a certain limit in terms of how you're filing, in terms of how much of a tax deduction you can take from the overall property taxes, which unfortunately, number one, I don't have the 100% best understanding of that, and number two, it's something you should be talking with your accountant or CPA about, because they have a a very good understanding of what your financials are looking like and how they can set you up for success when it comes time for tax season. Without further ado, guys, I hope you enjoyed this video. I will catch you guys next week. And of course, leave me your thoughts in the comment section below. All the links to my blog post and website are below too. Bye-bye now.